everybody, welcome back to another crypto market trade of the day video. It's Tuesday today. I want to talk about the Bitcoin. It was coming straight from the watch list after, right before the break below our last line of defense, main point of reference trigger level, 84,475. That level got broken a couple of months ago. Let me show you the close on that monthly bar just to give you a bit of background to what I'm about to talk what I'm going to talk about right now. So the close was 84,200 officially. That was February. Last month was a very important reconfirmation for that breakdown. Because price action right off the bat, we're talking about March last month, started hammering upwards. But I knew it broke below that big 84,475 level, so I wasn't buying into that move, right? I actually stayed in my short position. And price action went up pretty aggressively, made contact with 93,611. And bounced off, but it bounced off aggressively to the point it actually ended up negatively, leaving a slicing spike right across both 93,611, but most importantly, below, right across 84,475 and stayed and closed below, right? So that's a strong indication that price action's still on the back foot. Bear cycle is still running supreme, I would say, and I feel like the first big target we're gonna be facing here is the big obstacle on the way down, 38.2 Fibonacci correction, sitting at 73,500. So that's our official target for this bearish campaign. I also want to show you something interesting here on the long-term perspective. On the monthly chart, but I want to show you the grand trend, right? There's a major trend. Usually we talk about a major trend. We talk about, the intermediate trend, and we also talk about the short-term trend. This time I want to show you the grand trend, right? That trend goes years. You can go back years with the grand trend. And I will go back all the way to 2014, 2015. So we're talking 10 years, right? We're talking 10 years. And let me show you what I find here. It's quite interesting. I feel like the move, you remember the move all the way to 20,000 for the first time. That was back in late 2017. I remember that vividly because price action was literally coming from, almost zero, right? It was gradually coming up to 50 and then 100. 150, eventually it's kind of settled on 1,000, but then something happened during 2017 and price action began to explode. So it hit its all-time high at 20,000. That was late 2017. I feel like that was Elliott wave, Elliott wave number one. Right? Impulsive Elliott wave number one. And then we had a long bear cycle. It lasted for 2-3 years. All the way to 2020. I would say even the beginning of 2021. So I think solid 2.5-3 years of bear market, right? And at the bottom, you might say that was the corrective wave number 2, Elliott wave classic formation we're talking about here. So we had the second, right? And then even more explosive move, more than the first one, right? That was the third wave, third impulse wave, reaching 70,000. It actually reached 65,000 in almost a single shot move with no corrections. At least not on the grand trend. So, eventually I feel like, it had a big correction. single month correction, but then it actually went even higher to 70,000. So that would be impulse wave number 3. Then a big, hard, aggressive technical correction, right? I think it was, you know, it was shedding like something like 80%, right? Huge technical correction, but I would call this corrective wave number 4. And then the extended impulse last wave number 5, definitely extended, coming off the bottom of 15,000 all the way to 110. Can you imagine? It's almost like 10x, right? Incredible. But what I'm trying to say here is that was wave number 5. Now the break below 84,475 suggests that the cycle, 5-wave cycle, had been completed. And now we're maybe looking at a serious bear market, serious bear cycle that can go deep, can go low, right? It can go, you know, to 38.2, but it can go even lower, to 50%, or even lower than that, 61.8, and even 76.4. So we're gonna be watching very closely. Obviously, once we hit that 38.2 level at 73,500, we'll take a break, take the back seat, and we'll take it from there. If price action starts making a sound of, you know, continuation of that downside move, that downside trend, we'll start to chase the 50% Fibonacci correction at 62,420, and so forth, right? So yeah, that's the game plan. Right now, all eyes are on the next imminent profit target, 38.2 Fibonacci at 73,500. We'll have to come back, follow up, and keep you posted. That's about this, guys. Hope you enjoyed that video. We're gonna be coming back to this. We're gonna follow up and we'll keep you posted. That's about that. Have a great trading day. See you tomorrow, same time, same place. Take care.